I'm going to show you a strategy that involves trend trading. I will give you a combination of indicators, a list of rules to follow, and show you a scalping strategy that has been back-tested and proven to work. It works in almost all markets, in all time frames, and most importantly, it works. What I see a lot of people do is try to buy the absolute low on a downtrend and try to hit the exact pivot point. And while yes, it would be nice to hit the exact point of a downward reversal and make a lot of money when it turns, it's extremely unlikely that you'll find that exact point most of the time. Before going to start, please make sure to subscribe and turn on the bell icon for future videos. Let's dive in. I am a big fan of chart trading and not against it. What I mean by this is that I will only enter trades if the chart is in an uptrend. With all that being said, let's get started with this strategy. The number one rule, and probably the most important rule, is that at least with this strategy we will only trade with the trend. You may be asking yourself, how do I know if a chart is in an uptrend or a downtrend? Well, it's pretty simple. Just go to the Tradingview, click on the Indicators tab and enter the EMA for the exponential moving average. Then go to the indicator settings and change the length to 200. This will give us a 200-day moving average. I've also changed my line to red so you can see it better, but it's optional. So with this strategy, we will only enter a trade if the chart is in an uptrend, which means we will only enter a trade if the price is above the 200-day mark. If the price is below the 200 threshold, we will not enter the trade. So this is the first rule of the strategy. It must trade with the trend, which means we only enter the trade if the price is above the 200-day line. Now that we know rule number one, let's go to the rest of the rules that must be met in order to enter trading. Rule number two involves using the RSI indicator, but immediately go to the Indicators tab and enter the RSI deviation. Make sure you select this one. Next, we're going to change the settings a bit. Go into Settings and uncheck those three bottom checkboxes. So that cleans up our chart a bit. Then go to the Middle Lines tab and change the color to white and make it a solid line. This is just because it is now easier to see. Usually the RSI indicator is used to tell if the market is overbought or oversold. But in this strategy, we will use it to find momentum in the market. So rule number two is that we will only enter a trade if the RSI line is above the middle white line. If all other rules are met and the RSI is below the line, we will not enter the trade. The great thing about this custom RSI indicator is that it also shows divergence. If you don't know what divergence is, simply put, without going too deep, it is basically when the price moves in the opposite direction of the indicator. So if you see higher highs on the chart and lower highs on the RSI, this is a divergence. The great thing about this RSI indicator is that it will automatically show us if a bullish divergence is occurring. However, as a quick disclaimer, I have seen this indicator get confused and sometimes not show divergence. So you might have to look at the timer to keep that in the back of your mind. But it's still a great indicator. So this bullish divergence isn't exactly a rule to follow, but it's a great sign if you see it when all the other rules are aligned. Let's move on to rule number three. You probably know that I love momentum candles. It can be a great way to find the beginning of a trend. The particular momentum candle we will be looking for is what is called an engulfing candle. Simply put, an engulfing candle is a candle where it engulfs the previous candle. A bullish engulfing candle opens at or below the previous candle's close. The length of the bullish candle's body engulfs the previous red candle. Then the bullish candle closes above the previous candle's OPN. This is an absorbing candle, and it's a great way to find the start of a trend instead of looking for that candle ourselves. And we just look at the chart all day and let the indicator do the work for us. Go to the Indicators tab and enter the engulfing candle. You can choose it right here. When you add that, you'll see a lot of red and green arrows because we're going to be doing long trades. You can ignore the red arrows in this example. So all these green arrows are bullish engulfing candles. Rule number three is that we only enter a store if we see a green arrow. So let's walk through what a successful trade would look like when we see that the price is above the 200-day line, which means that the chart is in an uptrend. Everything is fine so far. Then we make sure the RSI line is above the 50 mark, which it is, so we're all good there. We don't need to see a bullish divergence, but if we do, it's a +1. and makes this trade even more bullish. Next, we look for the green arrow, which I should also mention right now. We enter the trade only after the green arrow candle closes. I only repeat, enter after the green arrow candle closes. This candle could show a green arrow, but then it changes, while the candle is still forming, and will not end up as an engulfing candle when closed. So once the candle closes and there is a green arrow, we will enter the trade. That for this specific strategy, we will set a stop loss twice the length of the entry candle. Then we will set our take profit at a ratio of 2:1. It's so simple. And boom. As you can see, the price is hitting our limit. Now, if you are one of those people who panic easily or get out of trades too early or too late, literally just set your take profit, set your stop loss, and just close your computer and let the strategy work. This will help you stop trading emotionally and selling too early, or worse, getting greedy and moving your profit. It's also important to note that you probably won't be trading this strategy every day. Since we only trade the trend, the chart won't be trending 100% of the time. So there will be days when you simply can't trade. That's okay. You just have to understand that it is a thing, and you will only trade when the market is working for you, not against you. Let's do one more example. First, we make sure our price is above the 200-day mark. Then we make sure that the RSI is above the 50 line. We also see that the RSI has a bullish divergence, which is not needed but increases the chance that it will be a winning trade, so that's good. Then we see a candle with a green arrow below it, indicating that it is a bullish engulfing candle. Then we wait for this particular candle to close. Once we enter the trade, we set a stop loss at twice the length of the engulfing candle and put a profit mark to the profit ratio. Then wait, let's see the price go up, take profit mark, and exit the trade. I just showed you a successful trading strategy that works great because you trade with the trend. That's the end of today's video, guys. Hope it was helpful. So don't forget to subscribe and turn on the bell icon for more videos like this one. Thanks for watching, and we'll see you in the next video.